What you're about to watch is a full uncut 1 hour long live trading session that I hosted with my 1% Club students. You will see exactly how I plan my trades, how I execute, how I enter, how I manage my psychology in real time. So if you have ever wondered what it's really like to trade live with an ultra humble, handsome, majestic, charming 7-figure trader, this is it. Enjoy the live trading recording. Yo, what is up, everybody? Hope you guys are doing well. Hope you guys are healthy and productive. Right, so welcome to the live trading session. For people who are new here, how it works is that I'm going to be going through my watch list. I'm going to be analyzing every single currency pair on my watch list and giving you guys my bias for the upcoming week, right? Telling you guys like what I'm expecting, this, and where am I expecting price to move towards next, right? But before we do, I always like to start off with like this quick little exercise, which is for you guys to let me know in one word, how would you describe your trading so far in September, right? Since the start of September until right now, in one word, how would you describe it, right? Just type the one word in the chat right now, right? It could be an adjective, it could be discipline, it could be unprofitable, it could be confident, it could be locked, focus, right? Whatever that one word is, type it in the chat right now. Yeah, learning, perfect, love to see that, bro. Profitable, nice, love that, man. The words you're gonna be using today is gonna dictate what you're gonna experience over the next few weeks or the next few months, right? Because you must understand that we don't experience the market for what it is. We experience the market for what we think the market it is, right? So what we think the market is going to do, right? That is the market that we experience, right? We don't trade the market, we trade our belief about the market, right? So no matter what has happened in the past, I wanted to let it go, right? No matter how unprofitable this month is, how many trades you have lost, how many accounts you have blown so far this month, I want you to let go of that, right? Because that's the past, right? That's the familiar past that you have absolutely no control over. But what you do have full control over is the present moment, right? It's how you approach the markets today, how you approach the markets the next few days, the next few weeks, the next few months, the next few quarters, how you shop every single day, right? Whether you follow your trade plan, whether you neglect a trade plan, whether you follow your risk parameters, whether you control your emotions in live market conditions, all of these are stuff within your controls, right? So starting, confident, process, nice starting, right? There's a lot of starting, good, right? Like I said, important for you to study, get the right foundation, right? Build a solid foundation so that when you eventually do go on to a demo market, you kind of know what to do, and then eventually when you go on to the live market condition, you'll be confident because you have built that competence and you have developed, you have gathered sufficient evidence that prove that you are who you say you are, right? Yeah, and your edge actually works. Okay, so yeah, like I said, guys, let's focus on the present moment, right? So I need to bring your attention to the present moment, bring it to me right now, right? Just really listen and focus and just really absorb all this information which I'm going to pass down to you in the next 60 minutes or so, right? Because I'm going to do my best to provide as much value as possible, right? While ensuring that I don't overcomplicate things, right? And ensuring that I really allow you to pick my brain, right? Allow you to understand my trade bias without using jargon or like complicated concepts that you guys don't understand, right? Everything that I'm going to show you today is me just applying whatever I teach you guys inside the 1% Club, right? It's just me turning the knowledge into execution, right? Me implementing the theory, that's it, right? There's no fancy shit here. All right, so let's get right into it, right? So as usual, how it works is that during this live trading session, I'm gonna go down my entire watch list, right? Gonna map out the charts one by one. And let's look at EURUSD first, right? So when it comes to EURUSD, so recently we got a break of structure to the upside right here, right? Which I haven't really marked up, but this just happened recently, right? And if you look at the grand scheme of things, right? Really look at things from like a big picture, like the 4-hour time frame, you will see that over here, when price actually took out the 4-hour strong low, we thought that, you know what, this is a market shift and price was going to shift bearish. But this was actually just a liquidity sweep, right? It's quite funny how you can see if on the daily time frame, the candlestick barely closed below the low, and the next thing you know, huge amount of demand step back into the market and push price up. So overall on the higher time frame structure, clear as day, super duper bullish, right? So this is still my 4-hour swing low, no change whatsoever since price has not taken out my 4-hour wick high yet, right? So I'm just gonna leave it here even though price just blasted right through it. All right, and then this is obviously still our 4-hour wick high since price has not broken past yet. So what we do have within this 4-hour swing high and swing low is the internal structure, right? This is the 4-hour internal structure. And if you look at the 4-hour internal structure, you will see that price has finished pulling back, right? It gave that market shift and then internal started shifting bullish when we create the higher highs, higher lows, higher highs, higher lows, higher lows, right? Clear as day, we are in the bullish internal structure right now. So this is where I want to get interested in the internal range, right? That is where I want to pay attention to, right? That is where I want to focus my energy towards, right? Because that is indeed what the market is doing right now, right? It's not caring about what it does over here the past few days, the past few weeks. No, this is the range that we are trading within, right? So if I had to mark up my last internal lower high, it'll be this lower high right here, right? So this will be the internal lower high, internal higher low. And then this will be your internal lower high when price starts pulling back, right? Because price has not created like a significant pullback yet, I wouldn't rush to judge this as the internal low, right? Internal high, right? So if that's the case, right, 1 hour internal structure, heavily bullish right now. So as much as possible, we want to continue riding this bullish momentum, right? We want to continue riding this bullish momentum because now our expectation is that price has finished pulling back and right now is going to go up there and take out this wick high, right? So that it can continue this large 4-hour bullish swing structure, right? That is our overall higher time frame expectation, right? And that is where we are expecting price to head towards next, right? To take out this 4-hour wick high, which means that it's going to continue bullish over the next few days, right? So if I'm trading EURUSD, I'm going to be looking for longs. So if that's the case, let's take a look at the internal structure again, right? The 1 hour structure. This is where, since we just got an internal break of structure, we are anticipating price to start pulling back soon. And the price can only start pulling back after it gives us some form of fractal market shift, right? So this is where you can potentially map out your last fractal low. It'll be this one right here, or even like this one right here if you want to be super duper aggressive. This one right here. And then this could be the last internal low, right? So if price take out this fractal low right here, what happens is that price could potentially be pulling back to this last internal low. And if price take out this internal low, right, give us a proper market shift, then yeah, we know for a fact that price is going to be heading into areas of discount, right, coming into deeper demand zones, right, before it continue pushing upside after it get that sufficient fuel from this area right here. By the way, if you're managing a 5 to 6 figure account and you're tired of trading alone, you need guidance, you need proper structure. I run private coaching inside the 1% Club. We help traders scale consistently, right? Become confident, become profitable without blowing their accounts and losing money and staring at charts all day. If that sounds like you, the link's below to actually book a call and see if you're the right fit. With that said, let's return to the live trading session. So today, if I'm day trading or I'm swing trading, I want to be waiting for price to come down to my point of interest, right? The demand zone that is going to allow price to fuel and push the upside so that we can capture the next leg, right? The continuation move itself. All right, so I'll mark up on my most obvious demand zone first, right? This one is the extreme zone, huge amount of imbalance, a lot of liquidity, a lot of orders, a lot of buy orders got in somewhere around this price, which means that we can potentially see a huge reaction the next time price actually come down and react from it. And then the next thing you want to mark up is obviously this point of interest here as well, right? Pretty strong zone as well since price swept liquidity from this low before pushing to the upside. And this was also the point where price actually fill up the imbalance that we have on the left hand side before pushing up, right? And then there is obviously this one right here, which is fairly unmitigated. Okay, so these are pretty much all the demand zones that I'm going to be paying attention to. And there's potentially this one right here as well. Right, there's this one right here. Okay, so these are pretty much all the demand zones that I'm going to be paying attention to because I know for a fact that if price comes down to either one of these demand zone right here, and if there's sufficient demand in the market, a large amount of buyers in the market, what's going to happen is that we're going to get that move to the upside, right? We're going to be able to ride that continuation. Okay, so yeah, so far, like I said, I'm not using anything crazy right here. It's just the mechanical market structural concepts that we teach you here, right? Basically, we know that if price take out the fractal structural, fractal market shift is going to happen, and this indicate that price is pulling back to the last internal structural, which is this low right here. And then if price take out the last internal structure, the last internal low, and give us a market shift, a proper market shift, what this means is that the pullback is happening, and right now we are seeing price pulling back to areas of discount that we have down here, mitigating extreme demand zones, right? Ideally below the equilibrium line, like around here, right? And then what we are doing as swing traders or day traders is to look for our entry model to form right here, to tell us, to confirm to us that the pullback is over, and right now we are switching bullish again. And then this is where you want to write the continuation to the upside, like what I mentioned, right? So you basically want to be looking for entry model at either one of these 3 points of interest. If you are day trading, if you are swing trading, and you want to be trading with the higher time frame structure, the higher time frame trend. Okay, so this is the bias for the bulls. All right, now for the bears, we know for a fact that, like I said, before price continue pushing up, it runs out of energy, right? Just like a battery, it has to charge again, right? And this is pretty much the battery blocks, right? This is where the energy is lying at, right? This is where the liquidity is at. So if price eventually run out of energy and it starts like fading away right here, right? What we can expect is price to shift to the downside, right? Supply to take back control of the market, and we can try to play this counter trend right here, right? We can try to short this move right here and manage our expectation, knowing that we can take profit at this point of interest or this point of interest right here, right? Until the market starts shifting bullish again. All right, so that's for the bears. All right, so today if I'm actually looking for sells, right, bear in mind, super duper aggressive, right? Super duper, I wouldn't say low probability, but I'll say like it's very difficult to actually try to predict the top and bottom of a market, right? Which is why we try to avoid these type of trades. But like I said, if you are super duper aggressive, you are looking to play the counter trend, you are a scalper, and you don't care about what happens on the higher time frame, this bias will be perfect for you, right? So this is where we see price approaching the next 4-hour supply, okay? 4-hour supply. And we also got an internal break of structural, which means we are already anticipating price to start pulling back soon. And then now since price has mitigated this 4-hour supply, we can expect there to be some sellers shorting the market, right, at this point of time. It's just a matter of when. It's either going to happen right here immediately upon the mitigation of the zone, or it's going to happen at the 50% of the zone, right? Which means it's going to come into the equilibrium of the supply zone and then start going down. Or is it even going to like go up there to the extreme, or even take out this zone, then starts going down, right? Like I said, there is going to be selling pressure. It's just a matter of when, right? That's why I say it's very difficult for you to try to predict the top, right? I can't even predict the top, so I'm pretty sure like Warren Buffett can't predict the top as well. So this is a very difficult game. This is a very difficult gamble that if you want to play, you can, right? But just know that if you want to look for short, try to predict the top, you need to make sure that you get extra confirmation in terms of, once again, your entry model, right? You want to really stack the odds in your favor, right? Increase the probability of the counter trend trade setup by really understanding the place, the location, right? Which is this supply zone right here, the timing, which is waiting for liquidity to be swept, right? Maybe perhaps below these lows, above these highs right here, waiting for all this liquidity to be swept, and then waiting for maybe pool inducement to be swept right here as well, right? Because what happens here is that at this point of time, you can start to see some retail traders will start to enter for a sell early, right? They'll start to try to fade this move, thinking that price is going to continue down like immediately after the mitigation of this zone, right? But this could just be inducement, right? For smart money to grab more liquidity above these highs right here, right? And maybe swap some liquidity on the left hand side as well before price actually start pushing to the downside. Okay, so if I were you trading counter trend in this move right here, where you are going against not just the internal structure but also the swing structure, I would be very mindful, and I will only enter after some form of strong liquidation. Okay, after some form of strong liquidation, after inducements have been swept during the pullback phase, right? I personally would not use the push inducement here because it's so far away, right? I'll much rather rely on bull inducement to be formed, that to be swept, and then look for my aggressive entry model from there. Right? Yeah, so potentially right now, if I'm counter trend trading, if I'm a scalper, I'm waiting for price to actually show me some form of inducement, right? Waiting for the inducement to be formed. It could be equal highs, it could be just an ordinary swing low, it could be trend line, whatever it is, right? Waiting for that to be formed, and then just patiently waiting for that to be swept, right? And then giving us my fractal market shift, and then wait for price to pull back, mitigate this extreme supply zone, and then short it all the way down to this demand zone first, and then potentially this next demand zone, right? If the market allows us to do so, right? If there's sufficient selling pressure. So it's really about what the market is going to do next, okay? Because this could happen or this could not happen, right? Like price could easily just blast right through this supply zone if it has sufficient momentum. It doesn't need to pull back, right? It doesn't need to mitigate any of this demand zone, right? It can just do whatever the hell it wants if, once again, it has sufficient demand on its side, right? So yeah, this is kind of the point where you want to really like just observe, right? Just observe which scenario is going to play out, right? Because price will pull back at some point of time, right? It's just a matter of when, right? So this is where it's so important for you to just like sit on your hands and just do nothing, okay? And don't get FOMO, because a lot of times when we see this, we start getting FOMO, right? Because you see such a huge amount of bullish momentum, and you start to think to yourself that, oh my God, if I don't get in right now, I'm going to miss this trade opportunity. When in reality, that's not the case, right? That's just your monkey brain lying to you, right? So yeah, do not get FOMO, right? Be patient, because what I've done right here is that I've done the preparation, I've done the research, I've done the analysis, and I know what is going to happen next, right? So now it's just a matter of waiting for that scenario to play out. It's like visualizing the future, right? But you can't rush to the future, right? You don't have like a bloody time traveling machine. You still have to wait for the future to play out, and that takes time, right? And this is why I always say your edge doesn't lie in your strategy, it lies in your ability to deal with boredom. If you can sit on your hands and do nothing, my friend, you're automatically gonna make more money, right? So yeah, that's what I'm waiting for right now. If I'm looking for shorts, I'm looking for that fractal market shift to happen, right? That inducement to be swept, and then short it all the way down to areas of demand or discount right here. If I'm looking for longs, actually no, by right you can do both, right? You can short it all the way down here, and then you can look for longs from here as well, right? So it's not a either or, right? It's both, right? You can do both, right? So if I'm looking for short, I'm looking to short it all the way down here, right? And then once price gets down here, and I'm looking for longs again, I'm waiting for price to confirm to me that the pullback is over, and then look to play the continuation move to the upside. Okay, so that's for EU. Really wanted to go deep dive into EU first before we go on to the other currency pairs, because it's important for you guys to kind of like see me break down an entire currency pair from like top to bottom, how I map structure, how I spot liquidity, how I identify inducement, how I actually enter before I actually just show you like the live trade analysis for every single currency pair, right? So I want to make sure that I give you guys the depth as well as the width, right? So yeah, before we move on to the next currency pair, I want you guys to write in the chat right now, what's the one key lesson that you have learned from my analysis on EU? Just one key lesson, right? The reason why I asked you to do this is so that you can actually cement this knowledge into your subconscious mind, so that you can actually understand this, right? Because there is a certain power of like writing things down. When you actually write things down, you actually verbalize it, right? What happens is that you are able to remember it even better, right? It becomes easier for you to memorize it because you actually understand the thing that I've just taught, right? So yeah, type that one lesson that you have learned from EU. Peter asks, what are your expectations with the news this week? Fundamentals matter. Yeah, 100% Peter. So to me, I view fundamentals more of like a long-term thing rather than like a short-term thing. Like I'm not looking at day-to-day news, right? Like I personally, I don't touch Bloomberg terminal. I don't look at news every day. I feel like that just cloud your judgment even more, because now your brain is filled with all this information, and now you are trying to control things that is fully outside of your control, like who's going to be the president, the World War II, like things that will move the currency pairs but that you have no control over, right? So I prefer to actually just understand the fundamentals, right? Like the big needle movers, which is the Fed's cutting the interest rates in September, right, by 25 basis points, and how that's going to affect the market as a whole, right? Like how that's going to affect stocks, currencies, US dollar, Bitcoin, right? But yeah, I don't really have a bias or expectation for FOMC or NFP whatsoever. I just know that the rate cuts is coming. It's just a matter of when, right? And I'm just going to adapt to when it does happen. Yeah. Stick to your plan. Don't impose your thoughts on the buy. Having the ability to be patient and watch the price movement. Nice. Good insights, guys. And I really like how you guys have different lessons, right? You can see, like, you guys literally watched the same live trading session and you all came to different conclusion. And now when you share your findings, you share your lessons, what happens is that everybody can just take notes. Like, just think about how powerful like this community is. Like Nate Ali say to not depend on prediction but to react to what the market is doing. Okay, put that in your notebook down. Theo's Andrew say don't rush your entry, wait for confirmation. Put it down in your notebook, right? All of these insights is pretty much like my 7 years of trading knowledge, and you can just absorb it just by really understanding and absorbing like everything that I'm sharing with you guys here today. And I'm gonna give you guys like a quote of the day, right? You know what? Let me do something special. I'm gonna give you a quote for at the end of every single currency pair that I analyze. So the first quote is, write this down. What you are looking for is not peace of mind, but rather peace from mind. If you think about it fundamentally, right? If you are indulging in junk food, right, to solve like an addiction, or you are addicted to alcohol or smoking a cigarette, or you are addicted to the feeling of revenge trading, blowing accounts, you're addicted to blaming the markets, right? All of this is self-imposed. All of this is just your mind playing tricks on you, right? Your mind just constantly self-sabotaging you. And a lot of times, like, you become unconscious of the fact that your mind is actually controlling what you do, rather than you actually controlling your mind. So what you are really seeking for is not peace of mind, but rather peace from mind. And peace from mind can be attained through simple methods, just like developing mindfulness through meditation, by journaling, dumping your thoughts onto a bloody notebook, right? Writing things down so that you can be free of the thoughts that you're constantly thinking of every single day, right? And it can even be simple things like just going for a walk, right? Just to empty out your brain, right? So, yeah, write it down somewhere. What you are looking for is not peace of mind, but rather peace from mind. Next, let's go on to GU, right? So when it comes to GU, my bias for this is quite similar to EU, so I'm not going to dive too deep into this, right? You kind of see my high-level analysis on it. If you guys didn't understand the analysis, go and watch the last live trading recording, which is, I think last week or like last week. Yeah, I think maybe 2 weeks ago. But my analysis hadn't changed whatsoever. You can see like everything here is still intact. This is still the 4-hour structure, nothing changed. This is still the internal structure. The only thing that changed recently is price broke out of the last internal high, right? Which means that once again, we're anticipating price start pulling back. Now, here's the difference between GU and EU. With EU, you can see price is approaching this 4-hour week high very, very soon, right? So there's a chance that there is sufficient momentum for price to just blast right through it. But with GU, because of the fact that it's still so far away from the week high, right? The week high, by the way, this is supposed to be a week high because this turns out to be strong low, right? Since price actually like started shifting and this market shift was not valid. But anyways, since price is so far away from like the 4-hour week high, there is absolutely no way, like 100% impossible for the market to just do this. It has to have some form of pullback, right? Over here or over here before it can actually do this. It cannot just leap like this. It can't just do quantum leaps and just go up just like this. Even if news come out, right? It just can't. Like, it defies the law of gravity, all right? So what you want to do is to kind of look at this right now and anticipate. Once again, anticipate doesn't mean get in, right? Anticipate when the market is going to start pulling back. Okay, so this is a trick that I like to do, right? And this trick allow me to kind of like recognize patterns in price, right? Because your ability to analyze the chart fluently comes from your ability to spot patterns, right? To recognize patterns. What I used to do as a trader is that I would just go and observe what price does for the past few weeks, the past few months, and really look at the price action of that currency pair that I'm starting right now. And I'll just mark up every single point of interest and just look at the reaction from each one of the point of interest that I've marked up. What I mean by that is that I'll look at this and then I'll see, okay, there's a demand zone right here. And it seems like price usually pull back to this demand zone and then it start mitigating it. And this pullback is usually around 180 pips, right? And then I'll just continue doing that over and over again. I'll just mark up every single point of interest. The reason why I do this is to really just look at the interaction of demand and supply in the market, right? Just to see when does price tends to pull back, right? How many pips does price usually extend to before it starts pulling back? And how many pips is the pullback usually? And exactly where does it tends to react from? Like what kind of point of interest does it actually react from? Is it a point of interest that swept liquidity? Is it an ordinary demand zone? Is it a point of interest that have a lot of imbalance? Right? So this exercise is very useful if you guys want to really understand the currency pair that you're trading at a deeper level, is to really just recognize patterns, right? Because history doesn't repeat itself all the time, but it sure rhymes, right? History rhymes, right? There are certain patterns that tend to play out over and over again. Like for example, over here, if you see price pulling back by, I'll say this is about 260 pips, right? So that's the average like swing pullback in GU. And if you drag this like over here, you will see that it's pretty much the same thing. Like this is not by coincidence. Okay, this is not coincidence whatsoever. There is a certain way that the market moves, right? There is a certain rhythm. So if you're able to really just understand the rhythm and follow the rhythm, right, you will be able to move with the market, right, in alignment with the internal order flow rather than against it. And that brings me to like the present moment right now. So right now, I know that price has just went up by, let's see, how many pips is this? About 300 plus pips. And if you look at history, right, maybe like around here, you will see that price usually push up, right, like a straight push about 200 pips and then start pulling back. What about this one right here? This is a very huge push, right? This one is about 400 plus pips. But bear in mind that this is more of like a swing range. This is more of like a, I wouldn't say this is like a smaller sort of swing range, right? So I'll say around like 200 to 300 plus pips, right, around this range, that is where price will start to pull back. So if I were to extrapolate this into the present moment and I mark this up right here, you will see that we are at the 300 pips mark. Does it mean that it's going to start pulling back right now because it just hit 300 pips? No, right? Because it's all about confluences, right? It's all about really stacking as many confluences as possible in your favor to kind of anticipate when the pullback is going to happen. So that's one, right, is to really like look at history and see what's the average pip size for a continuation move and a pullback move. And then if you look at the left hand side, what do we have? We got price mitigating like this supply right here, right? So it's pretty much adding more evidence to the fact that price is going to start pulling back soon. Okay, so just a quick recap. We got the internal breakout structure recently, which means that we're anticipating the pullback to start happening anytime soon. And then we got price extending up 300 plus pips, right? Which means it's kind of overextended, right? I wouldn't say it's super duper overextended because we did have like this minor pullback right here before the price goes up, right? So I'll say that it's maybe a little bit extended, right? And then we also got liquidity being swept right here, right? If you look at the left hand side, price is potentially sweeping these equal lows, equal highs that we have right here. Okay, all of these equal highs. This is good old liquidity. And then recently, look at this, price goes up, mitigate the supply zone, induce the early sellers, and then boom, swap the liquidity. So now we got this liquidity being swept, this liquidity being swept, price mitigating the supply zone, right? Price also at 300 pips. This is where we can start to anticipate the pullback to start happening soon, right? So yeah, same exact thing, right? My bias for this is quite similar to GU. Basically, this is the last fractal low. And if price is able to take out that last fractal low, giving us a fractal market shift, then we can anticipate price to start to pull back to this last internal structure right here, right? This is the last internal structure, okay? So if I'm looking for shorts today, what I'm gonna do is that if I'm aggressive, I could short here. Like right here, right now, I can just easily enter for a short. But if I'm more like sort of conservative, right? I want to see price give us the fractal market shift here and then pull back to maybe some refined supply zone and then play the move to the downside to this next opposing demand right here. And in this particular case, I'm going to use the conservative entry model, and I'll tell you why. It's because this push inducement is too far away from where price is currently at. We only use aggressive entry model in very high probability scenarios, right, where internal structure and swing structure is aligned, and we only use it if the push inducement is like right next to me. Like you can see it on the same chart without like zooming out just like this. If you have to zoom out, that means that the push inducement is too far away, which renders it ineffective. Not ineffective, but less effective, right? Which is why I personally would not take the risk of using the aggressive entry model in this particular scenario here, right? So yeah, if I'm counter trend trading today, wait for price to take out this low right here, right? This fractal market shift, wait for price to pull back to these extreme areas of supply, and then short it all the way down here. And then the rest is like the same thing. Like if you are a day trader, swing trader, you're much better off waiting for price to pull back to either this demand zone right here, or even like this demand that we have down here, or even this extreme demand zone right here. And this one is always going to be the most high probability one because of the fact that this is the extreme, and this one has also swept a lot of liquidity. And you can see this is also like the point of divergence, right? Where price come down, sharp move, but then demand was able to stop the momentum and cause price to reverse and hit up, right? So this is the institutional demand zone that I'll bet my money on if I have to pick one of these three zones right here, right? So yeah, that's for day trading, swing trading. Much better off looking for longs from this point of interest, from this point of interest, or even from this point of interest when you spot your entry model, right? When you get your liquidity swap, when you get your market shift, whatever, boom, enter for a buy, look to play the move to the upside, and you can potentially target this high here or even target this 4-hour or wick high if you are you have a lot of conviction in your trade idea, right? You want to make sure that you are passive in terms of executing your trade plan, but super aggressive in terms of managing your risk. The reason why I say you're going to be passive in terms of executing your trade plan is that because a lot of times when you are waiting for the trade to come out, right, for the A+ setup to appear, it's like fishing, right? It's like throwing the bait into the river and waiting for the fish to take the bait. You have to be passive. You have to play the waiting game, right? You have to just not do anything to interfere with the bait, like switch bait or whatsoever, when the fish could like be somewhere near the water. But you have to be very aggressive in terms of managing your risks, in terms of cutting your losses early, right? You need to develop the agility to switch your position around if the market proves that your trade idea is wrong. Because if you have that adaptability, right, that agility and that like fluidity, what happens is that you are able to really limit your losses and just have huge upside, right? Because if you think about it, right, all of your problems can probably be solved if you just quickly accept that you are wrong. Like if you just cut your losses immediately, right? Immediately when the price starts going 1 pip against you, you cut your loss and then you switch to enter for a buy, right? By the way, if the market gives you sufficient reason to do so, and price goes up, then what happens is that you just took a small loss, a minuscule loss, but now because you were quick to adapt to what the market is going to do, you're able to ride the real move, right? So at this point of time, even though your trade idea was wrong initially, you still benefited from it. You still profit from it because you were able to adapt to the market. So be passive when it comes to executing your trade plan, but be aggressive when it comes to managing your risks. All right, so before we move on to the next currency pair, right, I want you guys to let me know what's your bias for GU. Are you bullish? Are you bearish? Right, and also let me know your trading style as well, right? So type your bias followed by your trading style. So for example, bullish, swing trader, bearish, scalper, right? So write your bias and then your trading style. You could be waiting also, right? Whatever you plan to do, just let me know what's your bias for GU and the trading style. Bullish swing trader, facts, bullish day trader, bullish scalper. Nice, nice. Bullish swing, bearish scalper, nice. Once again, no right or wrong answer, guys. Depends on your perspective. It depends on the lens that you are putting on right now. Right, you could be bullish because you are thinking that this is going to happen. You could be bearish because you think that this is going to happen, right? Once again, no right or wrong answer. That is just your own perspective of the market. And as long as you can profit from that perspective, then what do you care about other people's opinion, right? Good, guys. Okay, let's go on to GJ next. Right, let's go on to GJ next. GJ, man, you know, it's been quite some time since I trade GJ because it's been quite difficult to trade it lately. I'm not gonna lie, it's been quite difficult to trade it lately because we have been quite choppy, right? But yeah, so far this year, the currency pairs that is the most profitable for me personally, because I tend to trade these currency pairs the most, is the Great Britain pound pairs, right? Is GBP JPY and GBP USD, right? These are the pairs that I love to death. They are so smooth, right? They respect market mechanics so much, right? And it just fits the time that I'm trading, which is usually like the London session, right? Which is like this timing right here, right? So yeah, I'm in love with the GBP pairs. Like they made me so much money. It's actually crazy. Yeah, but GJ, super duper choppy right now. It's difficult to day trade, difficult to scalp, right? I mean, difficult to swing trade, but yes, even more difficult to scalp in this type of market conditions. It's difficult, but it's not impossible, right? So let's push this to the left side right here. Okay, so this is the most recent breakout structure, and let's put this as my 4-hour strong low right here. Okay, and I can get rid of this one right here. All right, cool, beautiful. There we go. So at this point of time, we see that we got a breakout structure to the upside here. Let me see if there's anything on the left hand side for me to take a reference from. This one right here, nope, nope, nope. This is the next supply, which is quite high up here. Yeah, and then price has just taken out this high right here, if I'm not wrong. Yep, you're just taking out this high here. Okay, yeah, what happened was that, yep, you can see clear as day. Price did got an initial reaction, right? But there was not enough selling pressure for price to reverse. So it finally took out of this bearish order block, and then it becomes more of like a breaker block where price reacted from this zone right here, and then right now it's pushing to the upside. Okay, yeah, cool. So if that's the case, right, we are expecting price to continue bullish until it reaches this 203 level. Okay, so super duper bullish when it comes to GJ for the next few weeks or so, right? Yes, finally kind of broke off the range lately, right? You can see we got this huge ugly price action, and then price finally broke out recently. So it's good news for us, right? Long term, mid term, super duper bullish. It's just a matter of when do I want to get in, right? Because I want to get in the best price, okay? And if I look at this, if I really like try to map out the internal structure, right? Man, this chop is really, really bad. Boom, boom, boom. Yeah, let's try to do it step by step, yeah? Okay, so price goes up, pulls back, goes up, pulls back, right? So this was the most initial sort of like market shift, which signaled that price was pulling back. And then this was the next internal break of structure, right? And I don't care about what's going on right here because all of this is just internal structure. And then this means that this is the last lower high that led to this internal break of structure, which means that price has just given us a market shift lately. Okay. When in doubt, just zoom out. Okay, when you see such choppy price action, understand that if you look at it from like a bird eye view, which means from the higher time frame, the chop disappears. It doesn't disappear, but you pretty much reduce the noise that you're encountering on the lower time frame, right? That is why I always say, when in doubt, just zoom out. Because when you zoom out, you're able to see it from a higher perspective and you're able to really like look at a bigger picture, right? So in this particular case, okay, look at this. Okay, so this is the market shift. Obviously, there is probably like your fractal market shift like somewhere around here. This is like the fractal market shift. And then once you got the fractal market shift, price pull back to this demand right here, right? Reacted from this extreme demand. Swap some liquidity from the lows below here. And then when that happens, price just goes up, right? Creating like this internal break of structure or whatever, your fractal break of structure, right? Yeah, I'm just gonna put that line right here. That just indicate the fractal break of structure, and then price goes up, pulls back, right? I think we got another fractal break of structure here as well, right? This is why you gotta be very like precise and very mechanical in terms of like how you actually map out your structure. Alright, so you can see that if I just map that out, I'll see that this is the next demand, right? And we have pretty much created like a very nice demand chain right here, where price is just continuously respecting the previous demand zone. And since there's such a strong chain, we are expecting this chain reaction to continue, right? Which means that right now, I'm going to be interested in price pulling back to either one of these demand zones right here, right? Maybe this one right here. Yeah, this one right here seems unmitigated. Yeah, so this is the point of interest that I'm going to be waiting for price to get down towards. And then I'll continue to play the move to the upside, right? So I personally will put an alert at this point of interest. And then, yeah, just wait for this alert to get triggered. Now, the reason is very simple, right? When you see such a demand chain, right, where each of these different demand zones stack on top of the previous demand zone, it means that institutions that are scaling in, right? I see this as pretty much a clear signal that institutions are piling in their buy orders, right? They're entering for a buy right here, entering for a buy here again. After you sweep some, what? Liquidity, right? You can see every single time that price goes up, it only goes up after you sweep some form of liquidity. I literally cannot make this shit up, right? Sweep this low right here, boom, push up, right? Also mitigated this previous demand zone. Price goes up, comes down, goes up, comes down, sweep this low again, mitigating this previous demand zone, boom, goes up. Same thing happened over and over again, right? Next time around, price comes down here, right? Sweep some liquidity from this low right here, boom, goes up, right? So this thing is gonna happen over and over again, okay? So this is why I say, you need to learn how to recognize patterns, right? So if you look at this, right here, price goes up. Now, if this has happened, right, and we're expecting this to continue happening, what do we want to see in order for us to get in for a long right here? We want to see price pulling back, right, which means we want to see the fractal market shift, price start pulling back, blah, blah, blah. And then once price pulls back, we want to see price mitigate this most recent demand zone, which is unmitigated, and then also sweep some liquidity that we have on the left-hand side before we can get the push to the upside, right? So that is exactly what I'm waiting for right here, right? Waiting for price to sweep maybe these lows right here, tap into our extreme demands, and then push to the upside, right? So clear as day, what you can easily do, set an alert at this point of interest here, and then just do nothing until that one get demolished. Obviously, same thing, scalpers, right? You can look to play the counter trend if price take out this low here. If price take out this low here, we got a fractal market shift, which means that you can look to short it all the way down to this point of interest. But like I said, I will really manage my expectation. I won't try to target all the way down here, right? Because of the fact that we are within this demand chain, which tends to continue, right? So if you're scalping, short somewhere around here, target the next opposing, or rather not the next, but the nearest demand zone, right? Which price is most likely going to get a reaction from, which is this one right here. Okay, cool. That's for JJ. The quote for this one is, most traders tend to over-catastrophize losses and underappreciate wins because they don't understand the concept of time. They feel like losses are forever, right? When they are encountering a losing streak, they feel like losses are endless. And when they are encountering a winning streak, right? When they win a series of trades, they feel like this is going to last forever, right? When in reality, both wins and losses are impermanent. Like they are just impermanent. Like if you think about it, sometimes you win, sometimes you lose, right? But there is never a case where you can win or lose indefinitely. If you lose enough times, right, whether that's 5 trades or 10 trades a row, you will eventually win one. Like it's really like a coin flip. Like you can use the worst strategy and you can purposely try to lose every single trade that you see on the market, but you eventually win one. Like even though you have the intention to lose. Same thing with winning. Like you can go in the intention that you're going to win every single trade, but you eventually lose one. It's just variance, right? It's just the fact that both losses and wins are impermanent. And the sooner you can grasp this, right, the faster you can transcend and accept the market for what it is. And it's really like this impermanence nature of the market, right? It's just like death, right? It's impermanence. So before I move on to the next currency pair, right, I want you guys to let me know down in the chat, which one should I go through next? Should I go through gold or Bitcoin, right? Choose one, gold or Bitcoin, guys. Gold or Bitcoin? Guys, I'm telling you guys, right? You know what? I'm just going to quickly run through both. And I'm going to tell you guys my thoughts on both. Bitcoin is digital gold, right? We know that Bitcoin is digital gold. And why do you think gold is moving like this? It's only one reason, man. I'm telling you, it's only this one. It's not one reason, but it's like a series of reasons, right? The main reason is really the Fed's cutting the interest rate. Okay, so obviously the war, right, the economic uncertainty, the central bank, all of this stuff drive gold to where it is today. But the reason why it shot up so much is because the market is pricing into the fact that the Feds are cutting their interest rate. And if the Feds are cutting their interest rate, what happens is that we're going to get like a weakened US dollar, right? The US dollar is going to continue going to shit more than it already is right now. That's one. Which means that investors are going to be fleeing the US dollar and investing their US dollars into gold, right? An asset that is finite, an asset that is a hedge against inflation, hedge against US dollar. Number two, when the Feds cut interest rate, what happens is that we are going to transition into a risk-on environment, because this is where everybody now is able to borrow money easily, right? Because the cost of borrowing has went down significantly, which means that people is going to borrow more money and more people is going to borrow money. And what this means is that people are going to have a larger risk appetite right now. Since they have more money to borrow, they're easily going to invest the money that they've borrowed into assets that is going to appreciate, right? Things like gold, Bitcoin, equity, growth stocks, whatever it is. Because if you think about it fundamentally, right? If today I go to the bank and I want to borrow money and they charge me, I don't know, what's the interest rate? Maybe like 2%, right? Let's say they charge me 2%. This means that if I borrow 100K and I have to pay the bank back 2%, and then I can put that money into gold, right, or Bitcoin, whatever, and I can get at least 8%, I just made a profit from doing absolutely nothing. I just generated money from money that was lent to me by the banks. It's not even my money to begin with, but I just made money from leverage. I just made money from capital that was lent to me by the banks, right? So it's essentially like a free money glitch if you think about it. So that's why when the interest rates go down, we transition into a risk-on environment. Investors start getting more risk-seeking, and then they start to actually invest and park their US dollars into assets like this. And that is exactly why gold is so bloody high right now. That's it, right? That's it. Like, if you don't try to overcomplicate things, right? Yes, like I said, war, geopolitical factors can drive it, but ultimately it's just this. That's all you need to understand about fundamentals. Okay, that's all. So this means that if gold is going up just like this, guess what? It's only a matter of time until this thing is going to start going up, which is why I recently bought like 50K worth of Bitcoin, right? And bear in mind that I've never touched Bitcoin. Like, to be honest, I've never really invested in Bitcoin. The last time I invested in Bitcoin was like, I don't know. In fact, I don't think I ever invested in the Bitcoin. I only bought like a bunch of meme coins back then when I was broke. But yeah, even though price is so high right now, I still choose to enter because I kind of know that Bitcoin, right, risk on assets as a whole is going to be going up as a result of the Fed's cutting interest rate. And we can kind of start to see signs that it's already happening. If you look at growth stocks, right, you can see price is starting to go up, right? And Bitcoin is kind of like that lagging asset class. Everything else is going up right now, right? Gold is going up, stocks is going up. The only thing that's not going up significantly is Bitcoin, right? So it's still waiting for some form of like institution movement. But when that actually happens, this thing is going to take out its all-time high again, right? It's going to take out its all-time high again. We already start to see signs of that happening by having some form of market shift right here. And then price start to actually give us, you can start to see the signs that the internal structure is shifting bullish as well, right? Once again, this is not a prediction. This is not financial advice. This is my conviction. This is my belief on what the market will do, right? Whether the market actually does this, I don't know, right? That's out of my control. I'm just showing you guys like what I plan to do, or rather what's my bias for like this asset class based on the fundamentals. And that is also why I bought Tesla as well, right? Yeah, Tesla as well. Tesla and Bitcoin, right? Because like I said, fundamentals have shifted, right? Since fundamentals have shifted, it's only a matter of time where you'll start to see the institutional flow of money. You can already start to see it in Tesla. Like if you look at this is clear as day, institution pouring into the market right now. And wherever Tesla gap up just like this, we know that this is going to sustain itself. Because once again, if you look at history, whenever Tesla gaps up, it have this huge momentum of just continue climbing up even higher, right? Once again, all about understanding price, understanding why the market is moving the way the market is moving back then. Tesla isn't just a car company, great play. Yeah, so yeah, guys, I'm just going to quickly run through gold and yeah, because I kind of gave you guys my analysis on Bitcoin, right? Bitcoin, I just know that it's going to explode soon because we have been really like just refueling, right? You can see price has just been chopping around this range for so long right now. And recently we just got a market shift, right? Which means that the technicals is kind of pointing to the fact that the market is shifting fundamentally. And then also it's kind of like lagging in terms of like the other asset classes. And then for gold itself, right, no surprise right here, the fact that it's at its all-time high here. I'm just gonna expecting price to continue bullish. Yeah, honestly, I don't even have any expectation on gold. Like, it's just climbing higher and higher. I'm not trying to short this. I'm not trying to buy this as well. I'm just observing. Like, I'm generally just observing, right? Yeah, but I'm interested to see when the pullback is gonna happen, okay? I don't know when it's going to happen, right? But what we can do is to really try to map out what price point, what level needs to get broken in order for the next deep pullback to happen. And this is the most obvious price point right here, right? This 3.62K level right here. If this get broken, then we can potentially expect price to make a deeper pullback into this previous demand range that we have down here, right? But yeah, this is just the natural cycle of the market, accumulation, right? Distribution, and then later it will come back to accumulate again, right? Before the next move actually happens. But yeah, this right here is the price point that I'm paying attention to right now for us to know that the pullback is going to happen. Other than that, I don't care what price does. I honestly do not care if price keep on going up. I'm not going to get FOMO and enter right here. And yeah, I'm also not going to try to short this as well, right? Because that's going to be like trying to go against the bloody bullish momentum, which is a foolish idea. Okay, so yeah, that's pretty much it. I guess like the final quote that I want to leave it with you guys here today is by Charlie Munger, right? So this is not like an ordinary quote. It's by Charlie Munger. It's along the lines of invert, always invert. That means like don't try to think about the things that you have to do. Think about the things not to do and just avoid those things. Think about the things that will pretty much guarantee failure and inconsistency and unprofitability in trading, and then just avoid those things. And it's always a series of actions. It's always a list of behavior that lead you to losing the trade, right? That lead you to blowing the accounts. So if you can actually be aware of those behavior, those actions, those thoughts, those emotions, right, you are able to just prevent yourself from doing those stuff, right? So instead of thinking about how to become successful at trading, just think about how to fail at trading and just do the opposite of that. And that is, don't journal, don't follow your trade plan, don't create your trade plan, don't listen to your mentors, don't stick to your proper risk management, right? And by traveling down this path, you will eventually fail. You will eventually lose. That's it, right? So just do the opposite of what the unprofitable, the losing, the 99% of the traders are doing out there, and you will succeed. So invert, always invert. All right, so thank you guys for attending this live trading session, right? I hope you guys have enjoyed the analysis. And yeah, if you guys have any questions, please save it somewhere and just ask us. Because on Friday, we have a monthly coaches roundtable event where the 3 coaches are going to be there. So please bring your questions, right? Just write down any question that you have over the next few days when you're starting the lessons, when you are trading, write it down on Friday, bring it to us, right? Bring it to the 3 coaches and we will answer it live. Now, if you're watching this and you are serious about becoming a consistently profitable trader, not just dabbling around, not just chasing useless signals, but actually learning a proven system that can scale you to 6 figures or even 7 figures, then here's what I want you to do. I've opened up a few slots this month to personally work with traders inside my program, 1% Club. This is where I personally take traders who are stuck, blowing accounts, stuck second guessing, stuck repeating the same mistakes, and give them the exact mechanical system that I personally use to scale to 7 figures. And I also provide them with daily coaching calls and mentorship, which you have just gotten like a glimpse of in this entire live session. So if you're inconsistent right now, you're struggling to find profitability, you want a mechanical system that just works, that is simple, and you have the drive to get funded and scale up, then this is for you. The next step is simple. Just click the link below, right? Book a call with my team and we'll map out an entire game plan for you. Now, I triple guarantee that you'll walk away from that call with full clarity on what's actually holding you back, what needs to change, and exactly how we can help you to hit your goals this year. Not next year, not 5 years from now, but this year. So if you're ready to stop trading alone and you finally want to start treating this like a business, book your call below. I don't know how long these spots will stay open because we only accept like 5 students per week. So if you're serious, take action right now, today. And hopefully I will see you inside the 1% Club.